All right, traders, good day. Welcome back to the live trading room. Give me a second. Let me get my backup recording going. A little late today, but hope everyone is doing well. Back on TradingView. So, TradingView, guys, apologies for yesterday. TradingView was not doing what it was supposed to be doing, so it wasn't able to screen. But now we're back on it. YouTube, welcome as well. Hey, Justin. Hey, Ada. Welcome back. Before we get started today, question for you guys, right? I got this. We got a trader who's been very active on the platform. I don't know if you guys remember a few Q&As ago, but actually, I think it started here in the live room, and he was having trouble reading a chart. And we told him that, hey, if you want to get better at reading a chart, you need to practice. You need to draw in the ebbs and flows. You need to label them. You need to use the community. You need to get on the chat, share your charts, and ask for feedback. And I'll tell you what, it's been a few months and I've seen so many, not just emails, but posts from this trader on the chat. And it's great to see people follow through, because believe it or not, you tell people that, and sometimes they're like, I'm not going to do it. They're afraid of getting judged or whatnot. This trader has been shameless. He's been putting it on, and he's been like, hey, what's wrong? This was the latest chart I got from him this morning, and I'm curious. He had a question about it. I'm curious if you guys see the error or the thing that's missing. Not necessarily the error. He left something blank because he was confused on how to handle it. Can you guys see it? Get my little drawing deal out here. Yep. So the trader was confused about this part right here, right? About going into consolidation and then continuing the trend, right? And this is one of those things where we talk about rules. Yeah, Euro Yen Gartley lost. Loser. Big L, right? We talk about rules and whatnot, and how rules don't always make sense with kind of common sense, but they do most of the time. And that's what we're creating rules for. So for you guys that are new, because I get a lot of talk about, people don't want to do rules. We talked about this yesterday. People don't want to do rules because it feels like it constricts them. And you got to understand that you can have flexible rules, but certain rules, you create them not because it's going to work 100 out of 100 times, or you're going to agree with it, excuse me, 100 out of 100 times, but the majority of the time is going to protect you. The majority of the time is going to keep you on the right track. So the thing that he was confused about is right here, right? What does this leg do? Look left, structurally as clues, right? What does this leg do, and what should it be labeled? Right? This leg violates the previous outside return, and therefore needs to be an initial structure low, right? We call that a bearish rotation, right? So we're not in a, nope, not a retest. It violates it, unless my eyes are wrong, right? This candle right here breaks and closes below. So it violates it. So a big difference. If it retested it, then we'd still continue on the normal trend. But because we violate it, it is a new structure low, or initial structure low, I should say, which puts us in a bearish rotation. Now, bearish rotation doesn't mean we're in a bearish trend. It simply means that the bullish trend has been invalidated, and now we're kind of waiting and seeing what's going to happen next. In most cases, we're going to go into consolidation because the market consolidates 1,000,000% of the time, or 70% of the time in Forex. But we have to wait for a reset to technically be back in the trend. So we come up here, we bounce. This is still consolidation, right, guys? We move back up. We retest previous structure highs, but we don't break it. We don't violate it. So we're still in consolidation. We move up again. What are we right here, guys? Bullish, bearish, consolidation still, as far as our labels go. Hey. Didn't have my water this morning. Excuse me. There we go. Running, getting the kids ready for school. Yep. And then we have this still in consolidation. And then not until we get here, right? Not until we violate this level, this becomes, again, our initial, I can't write good with this thing, initial structure high. And now we're back in a bullish rotation. So a cool example of that, again, wanted to bring it up because, again, I'm so impressed by this trader that he's been actually doing this and being annoying to people out there and being shameless with his questions. If he's confused, he's not just sitting back being like, oh, someone's going to judge me and make me feel stupid. This is a dumb question. He's saying, hey, I'm doing this. This looks good. But then I got to this part and I got stuck. Help me. Because that is how you learn. So hats off to him for that. Now, real quick, news day today, right? You're going to hear a lot of mutes because I'm having a killer allergy attack. We went from like 60 degrees to 30 degrees. Now we're back up to 60 today, and that just kills me. But news today, right? We had CPI come out for the pound already this morning. We've got CPI coming out for Canada today at 8:30, along with retail sales for the dollar. And then a little bit later today, the normal 2 a.m. slot, we've got our FOMC meeting minutes, which is the biggest one of the day. So we do have a news-filled day today. We do have an FOMC day, which typically markets kind of, they kind of don't really show their hand until after that happens. But then the rest of the week is pretty dry. There's no really significant news event for the rest of the week, so there should be smooth sailing after that. As always, we got be careful of the Australian and New Zealand news that happens in the Asia session. Low liquidity sometimes makes those things go crazy, although we haven't really seen that as of late. Real quick, it says, I would suggest to him he uses horizontal lines for his watermark. Yep. The number one tool out there. I was thinking about doing a YouTube video, right? Real clickbaity type of title. The only tool you need for support and resistance. And then just like line tool and then just leave, and that's it. But it seriously is a good tool. Line tool, crosshairs. That's why I keep the crosshairs on my screen. It really is a valuable tool. All right, so let's get into today's trade of the day. I really like thank you. We got a viewer on TradingView. I really like my updates. No problem. I love the markets. I am. This is what I do for a living. So I love it. Let's go to today's trade of the day. I had a lot out there on the radar today, but not a lot. If that makes sense. A lot of it was follow-ups on yesterday. No real trading opportunities that I'm super excited about. But let's look at either Euro Aussie or Pound Aussie. And we'll go Euro Aussie first. And I'll tell you why I'm excited, and I'll tell you why I'm not too excited about it. So Euro Aussie here, right? We could look at our most recent move, right? Our most recent move is swing low to swing high. Now, we just finished talking about trends and whatnot, right? You can see that we came to our previous level of structure. Take out my horizontal line tool, the number one tool you need when identifying support and resistance. And we look at our previous level of structure right here, and we ask ourselves the question, did we hold or violate that level of structure? Maybe a little bit hard to see because I got a thick boy line up there. I'll lighten it up. But did we hold or violate it? We technically violated it by the slimmest of margins, right? But before we get too excited, look left. Structurally is good. Now it's a green line on a green candle or see. That's not my best job of doing it. I should make this white or something like that. Maybe that's a little bit better. But regardless, we have an overlapping level of structure. Whenever we have these overlapping levels of structure, which one is going to be the more important one? These are very tricky levels if you guys are new. The market tricks people into doing one thing, kind of like what you see in front of you. It tricks people into thinking there's a break, and then before you know it, there's another level of structure and there's a hold, right? So we got a hold of structure. Price has retraced back down, and now we're in a neutral territory, right? You know, I like to bracket out levels of structure. If we go higher, we're likely to go here. If we go lower, we're likely to go here. So we're right near that low watermark. And you're going to see there's not a lot of room there, but there's not a lot of other things I want to talk about in the market. So we're going to make this our trade of the day anyway. This is setting up one of my favorite patterns in the market, which is going to be our descending triangle. Now, this is a breakout pattern, right? Price action has come from a directional move. We've retraced. We've come back down. We've retraced. We've come back down. We've retraced. And the key thing you want to pay attention to is we've started creating a bit of a base down here, a horizontal level of support. And our top, right, keeps getting lower and lower and lower, meaning that the bears are able to push price down essentially to the same level each time, but the bulls are having problems pushing the market higher. So again, I'm a sports dude. Imagine it like it was like the if you guys watched the Super Bowl the other day, it was like the Bengals trying to stop Aaron Donald. Like they did it for a little bit, and throughout the game, he just kept hitting their offensive lineman in the face over and over and over again. And by the time the fourth quarter came, they just gave up. They've had enough. They're like, I'm tired of getting hit every down by this dude. And then he finally breaks through and sacks the quarterback and makes the game winning play. So typically what you see in this scenario is the Bulls give up. So I always like to put yourself, I always like to create a story around the market. A lot of people think I'm crazy for doing it, but I think it's a great way to understand the market. Imagine if you are a buyer, right? You are a buyer that is buying at resistance or support down here, right? Let's say your targets are up here at the highs, right? So when you first buy down here, you're able to push the market up this high, right? Do you feel good or bad about yourself? Which one? You probably feel a little bit good, right? You bought something, the market immediately went in your direction. You're like, okay, support held, all right? The market comes back down, right? You're like, okay, that sucks, but price structure has never been violated to the downside, so it's all good. And then price pushes back up again. You're like, okay, this is normal, right? We're gonna push up, right? Double bottom, whatever like that. We're gonna make this move. And now this time price refuses to get to the previous watermark. Are you feeling more or less confident in your trade? Probably feeling a little bit less confident, right? Then it does it again. And we come up even shorter this time. More or less confident in your trade. Probably a lot confident. Again, it's like betting on a boxer, and like throughout the rounds, they just keep getting pummeled. Like they're like, okay, you'll make a comeback. Okay, this isn't getting better. Okay, they're gonna lose, right? So you have less and less confidence in this trade, and two things happen, right? As a buyer, right, you start thinking about your exit plan. You start saying to yourself, you know what? Akil always says good moves don't last. This is not giving me any positive signs. Let's think about maybe getting out for break even, right? Maybe getting out for a little bit of a loss. So that's what the buyers that are already in the trade are thinking, right? The ones that aren't in the trade, right? Maybe Chris has come late. He's looking at this and saying, "Oh hell no, 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 no! I don't want in." Right? So you have that buying pressure decreasing on each failed attempt, right? You have the buying pressure decreasing, then you have current buyers that are looking to panic and get out. They become sellers, and eventually, what we would expect from this is a breakout to the downside. So this is my favorite pattern to trade. Now, that was the cool part where I explained to you my favorite pattern, and it made sense and it sounded all cool and you're all excited about trading it. The bad part is this, right? So when we look at a trade, we got to think about three things, right? Entries, stops, and targets, right? Entries are going to be pretty simple, right? We should have rules for entries, right? Ivis, we should have rules for entries. Mm-hmm. Mm-hmm. Yeah. I just messing with you. Um, stops are going to be based off those entries. Plenty of different ways you can do stops here. You can do it off of your candlestick entry. You can do it off the previous level of retracement. But we need to know entries stops and targets to determine our risk reward. So targets is important because targets is going to tell us if it's an actual trading opportunity, right? There is a difference between a good setup and a good trading opportunity. I think this is a good setup. The question is, if you were looking to get involved in this setup, then where are you expecting price to go to? Shoot me some numbers, and I'll tell you a mistake that many traders make. In fact, it's probably it's the biggest mistake that I see traders make, or I think one of the biggest problems with trading. But shoot me some numbers of where you'd be looking for targets at. YouTube, you've been quiet out there. Shoot me some numbers too. Come on. 158.05. Let's break out that magical horizontal line tool. 158.05. Right. Let's just call it 158 even right here. Yep, 158 even. When you enter, once candle closes, underline or wait for pullback. Either way. So there's three ways to enter breakouts, breakout setups. You can enter before, during, or after. So before would be during one of the pullbacks. So you're setting yourself up prior to the break in anticipation of the break. During would be like a sell stop order right below the bottom trend line. So once price breaks out, then you would sell on the way to the downside. And then after would be the pullback. So to confirm breakout and then the pullback. Ryan says 159.50. I think we're looking at the wrong thing, Ryan. 159.50 is above us, not below us. 156.20 I got on YouTube. Let's draw that one in too. 156.20. Let's steal one of these bad boys. 156.20. So right down here. Will the dollar Swiss go down on today's bad news for the dollar? Can you guys answer that question for me? Will the dollar Swiss go down on today's bad news for the dollar? There's so many. There's a lot of things wrong with that question. Josip, and I hope if I'm butchering the name, I apologize. A lot of things wrong with that question. One, what is bad news? Right? Here's a question for you, right? And this is the thing about fundamentals, not to get too deep into it because I don't want to get too much off track. But one, if bad news is expected, like so when I say bad news, let's say if it's a negative number that's released and the negative number is expected, is it actually a negative release? So if the market is expecting a bad number and a bad number comes out, is it still a bad number? As far as, or is it a bad news? Is it bad news, I should say, right? The markets move off of deviation from the expectation. So the thing about fundamentals is sometimes it's weird, right? Bad news can be good news can be bad news, right? So if the market expects a bad release for, I'm assuming you're talking about retail sales, perhaps. If the market expects a bad release for retail sales, but the number is bad, but less bad than the market thought, that's good news. Same thing if the market expects good news, but the market gives you good news but isn't as good as what it thought, that could be bad news, right? So it's really, the markets move on deviation from the expectation. So bad news isn't always bad. Good news isn't always good. Many times you can see good releases and bad reactions because the market expected something else. The market had priced in something else. Many times you can see bad news and good reactions, right? It's weird. It never made sense to me until I started spending time in the market, because I used to be the same thing. Like, okay, it's a bad number, we should see a bad reaction. And you get a bad number in a market like booms. It's like, it's bad, but it wasn't as bad as we thought it was going to be, which means it's good. I'm like, what? That makes no sense. But in general, I don't know what the market will do. Yeah, we don't know if the dollar Swiss will go up or down. The market will do whatever it wants, whenever it wants. I'm a technical trader, so I personally don't make decisions based off of the news. I do have some home run trades where we'll take fundamental events into account for certain news events. But as far as this one goes today, I just have no idea. I don't know if it's going to go up or go down. I don't know what the reaction is going to be. I can tell you 15 minutes after it happens, after the dust settles, but aside from that, I just don't know. But I thought it was a cool example to explain about news, just for the newer traders. Bad news isn't always bad. Good news isn't always good. It all has to do with what the market expects. So we got some more numbers. Ryan says 157.30. Okay, so the level that I would, the next level, and I'm a structure based trader. The next level that I would anticipate price coming to is similar to what and Cody says, if someone knows, I'll put 100 lots on it right away. Cody, give me a call later. I got an insider for nah. I'm in agreement with the live room right here. The level that stands out for me is our most recent level of structure. I'll make this into a box so it stands out a little bit easier for you, but right in here. So I wouldn't anticipate, I wouldn't be comfortable taking targets anywhere past this previous level of structure. And obviously there's not, maybe not obviously, but on this time frame, right, you can always drop down to a lower time frame. There wouldn't be enough room to really get an entry here. Now, again, you can go to a lower time frame and position yourself somewhere in here, and we can look at that maybe a little bit later and make room. But on this higher time frame, there wouldn't be enough room for here. Now, someone mentioned this lower level of structure right here, $1.56, right? Now, if you're someone shooting for this level, right, does this change the perspective of the trade for you guys? It looks like a nice 1618. It's probably gonna be a little bit shy. My eyes are wrong. Get there, baby. Get there, baby. Get there. Oh, yeah. Look at that. I was right. Ooh, baby. Probably AB equals CD too. I forgot who said this on YouTube, but well done. Someone shot a snapshot in the trading view. I'm not going to have time to look at it, but if you want to explain or ask a question, let me know. Look at that level. Ooh, yeah. 1618, AB equals CD. I forgot who said it, but good analysis, YouTube. Good analysis. So if you're someone that's shooting for that level, right, you've got all the room in the world, right? You've got a situation, right, if we just compared the two, and let's say you're entering right here. Let's say you're positioning yourself before the trade. Why'd you disappear on me? Here we go. Let's say you're positioning yourself right here. You're entering at market. You're aggressive. Like you've got targets down here. You've got stops, let's say right above the previous high, because if we break this high, this takes out the descending triangle, right? Almost a 3-to-1 risk reward. Beautiful. Compared to the person that's shooting for here that has an inverse risk reward. So do you see how you can have one setup, multiple traders, and it could be a good trade for one group and a bad trade or a non-trade for another group? Give me a yes if that makes sense, guys. That's extremely important to understand, because when you get out there in the internet world, when you get out there amongst other traders, there's going to be a lot of different opinions, and you guys can be looking at the same thing and have different opinions, and it's very easy to lose confidence in your trade, because Ivis can be like, yeah, this is a great setup, and then Orsi comes in like, not for me. And then you start thinking like, oh, well, Orsi's got more experience than me. Maybe it's not a great setup. Maybe I shouldn't take the trade. And then a day later, it breaks out and does exactly what you were supposed to do. And you're like, man, I should have took the trade. And then you want to get revenge on the market because you missed a good setup, and now you're hunting for another setup. And then you get into the revenge trading cycle, and then it all ends the same way. You go broke, right? No matter how many paths you choose in this story, it ends the same way. You go broke, or if you're lucky, you stop yourself before going on the path of going broke. But good example there. Now let's go down to the lower time frame just a little bit. It's gonna be a longer live stream this morning, because again, this could have the first target level could be appealing on the lower time frame as well, especially if you're able to position yourself before the break, or I guess even after break. Let's go down to a 15, some day trading action here. Again, give me a second to swig some water a little bit. There we go. While we're doing that, YouTubers, do me a favor, hit that like button. I see only 2 likes on there. There's about 30 of you guys watching. So come on, the math doesn't add up. Hit that like button. Should be a 1-to-1 ratio between that thing. So let's say you're on the 15-minute, right? Because this would be a perfectly, back when I was day trading, this would be a setup that you can go down to the day trading time frames on. Because look, it's the same setup. It's a little bigger and larger, but it's the same setup. So someone mentioned earlier about a pullback trade opportunity. So let's look at this. If price action gets a confirmed break here, and then let's say we pull back, right? All of a sudden, right? Let's say you get your lower low, lower close, whatever it is right here. This is your pullback, right? Aggressive stops would be above here, but you could even be right above your entry signal. Then all of a sudden, the move down to, was it 158s? All of a sudden, that's a 2-to-1 risk reward right there, right? So even as a day trader, this can be a really decent setup. Um, and it doesn't look like it on the 4 hour chart because those candles are going to be bigger. It's not going to be as much time for you to get involved. But from a lower time frame perspective, this could be plenty of time. I want to load up a range bar chart real quick. Don't tell TradingView I'm not supposed to do this. But I just want to get a quick peek, and I don't want to ditch you guys yet. Usually we go over to them after I shut the live stream down. But I want to take a quick peek. I'm just curious because a range bar chart will often give, well, I like the range bar charts or tick charts for a different look. And I just want to see real quick. Oops, get this out of here. Sorry. You didn't see nothing. And then Ivis, I'll get to your question after that. Let me just load up Euro Aussie. And I want to go to, what's our ATR here? 10, probably an 8 range chart is close to the 15. So give me a second here. This may be something to watch, right? If you want a quicker look at that break. Again, a little sloppy here, maybe go one range bar higher. But same thing, if you're looking for a break and a pullback, we know that, we talked about this yesterday, we know that range bars are going to give a quicker view or a different view, more of an inside look at price action, right? That's a perfect time frame or type of chart to go to, not a time frame, but type of chart to go through if you're someone that's trying to catch that break and you're afraid that's going to be a quick move that never gives a pullback. So I think this I didn't look at the lower time frames this morning, but this actually turned out into a very good trading idea. Again, wasn't a lot of opportunity for me on the higher time frames, hourly and 4 hour, but plenty of opportunity on the lower time frame. So Euro Aussie trade of the day. Let me know if you have any questions over on YouTube. I know there's a delay. I'm going to answer one of the live room questions real quick. Again, hit that like button. Ratio still not 1-to-1. You're killing me, Holmes. And then I'll let you guys go for the day. Ivis's question said, and Vincent, let me know if you have any questions, Vincent, on TradingView. Ivis said, I like the concept where you say that sellers or buyers will likely be looking to take profits here or there. It has helped me become more precise with targets and stops as well as my psychology in the market. Thank you. Did I tell you I was so scared to teach that way for the longest time? I told the live room members or people that have been with me for a while. So the Foundation 2 course talks about that a lot more. But I started thinking that way a while ago in the market, but I just thought I was crazy. Yeah. Well, not crazy, but like my learnings, like the way I think about things is different than most people. And like my whole life, I was taught that was negative because like, I was that kid in school that would I get the right question for the math test, but I would do it in a different way than the teacher wanted me to do it in. And then I'd get like D's on the test because I got the right answer, but I didn't do it the right way. I didn't show my work the way she wanted to. So my whole life, I was kind of like poo-pooed on that type of thinking. Even in like college, like I took notes differently than like most people, and like people wouldn't want to study with me. Not that I want to study with them either, but because my notes were different. So I started thinking this way because it really helped me understand structure. Because it was one thing. I think it's one thing to understand. So like we know what a candlestick is, right, guys? We know what a candlestick is. We know if it's green or whatever. If it goes up, it's bullish. If it goes down, it's bearish, right? We know that stuff. But there's so much more to it, right? And I think when you can understand what it's actually telling you, it helps you. It helps you understand it better, right? It goes back to even like my dad. I learned to drive on a stick shift, so a manual car. And like, he was teaching me how to change gears and stuff like that. And he was always like, you got to feel it. You got to feel the car. The car will tell you when it's ready. I'm like, what are you talking about? Like, don't I just watch the little speedometer thing? And when it hits this level, I shift. He's like, no. You'll hear the car. Like if it wants to change, it'll give you that, right? And once I learned that, I was able, because we had a really old broken down car. If we weren't precise with the clutch, it was stalling out. Oh man, so many war stories. I got stuck on so many hills. Sheesh, just like an 85 Honda I was driving. And so like I had to be precise or you was going to stall right in the middle of traffic. And that is not fun. You got to put the hand on the window, go past, you know? But yeah, I started thinking about that in trading. The more I started going back to price action because I went to like patterns. I went to strategies that would make me money first because there was urgency for me to make money. And then once I got successful with that, I really started falling in love like with basic price action, right? Support, resistance, all that stuff. And I was taught when I was kind of learning how to trade. I had a luxury when I was with Trade Empowered to talk to a lot of bankers and a lot of insiders in the market, and they would explain kind of how stuff works. And I was too young, like I heard it, but I was too young to understand it. So when I went back to learn about price, now all of a sudden the stories that they told me started to make sense, and I started like seeing it. I started seeing instead of just red and green candles, I started seeing like the action of buyers and sellers, like long wicks, rejection, like oh you tried to do this, and oh nope they got you, and stuff like that. Um, and it just made me understand the psychology of a pattern a little bit more. And I think I don't think it's necessary to be a good trader. But what it did was it gave me confidence. It gave me confidence. So now instead of just, and here's what Vincent real quick was looking at over on TradingView, if I can bring it over. Instead of just looking at something and being like, oh, this is a descending triangle, it should break to the downside, because there's still like well, why should it break to the downside? There's that question. Now that I know the full story behind it, where it's like, this is why it should break to the downside because of this and this, I'm a lot more confident in my analysis. And for you guys that are vets, you probably noticed, right? Confidence is like 75% of the battle, right? Am I wrong in saying that? Confidence is like 75% of the battle. So if you're, because again, consistent analysis plus consistent execution equals consistent results, right? If you're not confident in your analysis, you're not going to be confident in your execution, and you're going to make those psychological mistakes that kill traders, right? You're going to take stops early because you're scared. You're going to take targets early because you're scared. You're going to enter early because you're scared, right? Once you're confident, that fear is gone, and now you're just a pip killing machine, right? Where you're just like, give me the move. I know what I want. Give me the move. It should go here. If I'm right, it should go here. If I'm wrong, it shouldn't go here. None of that none of that self-sabotage stuff. So I think it does help massively. So thank you for saying that. Thank you. I always like feedback on that because again, I'm still not too confident that everyone understands it or that's the best way to teach. But you guys seem to like it. So that's all that matters to me. You guys on the platform seem to like it, and no one's given negative feedback. Or if you have, you just haven't said it to my face. You just haven't said I'm crazy to my face. So appreciate it. All right, I'm gonna get to some of these YouTube questions. I'm gonna shut them down and we'll get on to our next pair. Live, remember, start thinking about what pair you want to head to next. Type it in. Will Swiss go down on today's news? Hope you're doing good. Tomorrow will be my first stock I will buy in advance. Nice, congratulations. First live trade. Always a big moment. Akil, stop trading Forex and start trading indices. I do, Hans. I don't trade them, I invest in them. But no, I will. Despite your demands, I will not stop trading Forex. Why? Here, like that's the stupidest thing I ever heard in my life, right? Okay, well, Akil, you're doing good at something and you're making money consistently. Stop doing it. Like what the like? That's just stupid. I'm not saying you're stupid, Hans, but the statement is stupid, Hans. Like, right? That's the stupidest thing I ever heard, right? You've got a successful business, or see, you've got a successful business, Cody. You should stop doing it. Okay. It's dumb. But I do invest. I do invest in indices, so you don't have to worry about that. I have a very diverse investment portfolio. I've got an active trading portfolio. I've got a longer term investment portfolio. I've got a real estate business, so you don't have to worry about me. But if it means that much to you, I will shut down everything. I will throw my profits away, and I will stop trading the thing that has changed my life for the last 15 years. Ridiculous, right? Like, why would anyone tell someone else what to do? It's ridiculous. Gosh. Risk reward participants delight. Ryan Akil, just run over the volume indicator you had. Just run over the volume indicator you had on. Find several. The one that was on the chart or the one below the chart, Ryan? And we'll make that's the last question, so we'll get you guys out of here. I would like to send you a private message. Sure, go for it. Um, and there's a little bit delay. Is there anything such as confluence in forex trading? Um, that's a long rant, Ari. I would advise you to do this. YouTube search, and by confluence trading, do you mean like correlations, or do you mean like confluence as far as like using different tools and whatnot? And here you go, Ryan. It's the volume profile fixed range is the one. Yeah, you can access live rooms from mobile. Yep. So volume profile fixed range. And Ari, if you're referring to correlations, again, that's one of my hot topic issues where I'll rant for like an hour on it. But go to there's probably a trading. Just go to my YouTube channel, or YouTube search Akil Stokes. Let's see if that works real quick. And just if you do Akil Stokes correlations, you're probably gonna find a bunch of stuff here. Akil Stokes correlations. Let's see what comes up. There we go. There should be a video that says I'm not crazy about correlations. That's from 5 years ago. I'm sure there's a trading coach podcast about it as well. Um, but I've got some opinions on that are probably different than what you're used to seeing out there. So awesome. All right, guys, YouTubers, I will see you guys tomorrow, same time, same place, 7:30. Thank you for joining. You guys were awesome today. Same thing on TradingView. Good questions, good participation. Live room members, let me know where you want to head to next. If not, I will decide. All right.